Welcome, this is James Fossil, and this is a live trade review for week 1. It's the second in the series. And just before we get rolling here, let me, bottom left of each of the reviews, there's this little number here. And this last digit actually tells you which what number it is. Actually, it starts with the 0, so 2 would be 1. So the first one was actually 0. The second one is 1. Okay, and that's just if you need to reference a review at a later time. Okay, so let's get started. In this review, I'm going to talk about currency pair, US dollar, Japanese yen, so USD, JPY. The broker is FOREX.com. And, of course, the broker is important because of the chart time. Not all brokers have the same server time, so their chart time varies. This particular trade was on the 20th of August, 2017, at 22 hours and 37 minutes. The direction was short and long. All right, so let's jump into the trade. So this is the starting point, the initial point of the trade. This was actually early in the day. As you can tell by the early candles, this tends to happen in the early moments of day opening. That was the entry candle, right? The entry point is right there. I took a sell order, which means I took a short. So then I realized, oops, I made a mistake. I didn't want to take a short entry. I wanted to take a long entry. So I exited that trade. Back to the same candle, new trade. Because, I closed that trade, opened this trade. It was all in a matter of like 10, 15 seconds. Okay. Same, the entry point's a little bit different, but pretty close to the same. So there's the buy. So I'm taking a long position, which means looking for the price to go up. And let's just see how it rolls out. So it's moving, pulls back, flattens out, and I get a nice candle there in my favor, pushes it again, looking good. So definitely pushing higher. Candles change, not sure. I get the red candle, and that's my exit. Okay, so let's talk about the trade. That's the entry, which I've already mentioned, right? So keep in mind, before I go any further with this, right, the time frame is really important. I traded this solely on the M1 chart. So this is the 1-minute charts time frame. And since this wasn't taken on a higher time frame, it's important. It matters because my expectations change based on the time frame that I'm trading. So this is a lower time frame, so it's typically smaller candles, smaller profits, right? Smaller targets. Higher time frames like the H1, the 1-hour candles, tend to be bigger candles, more pips, bigger profit targets. So pay attention to the time frame that you're trading and make sure you set your expectations accordingly. Okay, so let's look at this. It pulls back in 3 candles. which means I'm going to pay attention, right? I'm watching. I'm like, okay, do I need to get out at this point? Because that's moving against me, right? I want the price to go up. I don't want it moving back. I don't want it dropping. However, at this point, it's not touching my entry. It's still above it. And so really what I'm dealing with right now is the spread, the difference between the bid and the ask, which is the cost of the trade. So there's no reason for me to exit the trade at this point. Next, you notice it flattens out. So about 5 candles there, 1, 2, 3, 4, 5. The price really flattens out. Again, it's staying above my entry. There is one pin that kind of pushes through but comes right back, closes above it. So again, still dealing with the spread, right? And that's a cost I know and I accept, as all traders. I mean, that's just part of the business. So I'm staying in. There's no reason, again, to exit the trade. So at this point, one thing I did do was I looked at the M5, the M15 time frames, because I wanted to see if the trend had changed on the higher time frames. And both those time frames were showing a bias, a long bias, a bias to the upside. So again, no reason to exit the trade at this point. Next, that's followed by this beautiful move away from my entry. Actually pushes above all this noise over to the left, so that's nice. Second candle, third candle, fourth candle, pushing really nicely, right? But then we get into this area here, and ignore the red candle right now. But so we had 4 nice pushes up. Remember, we're in the M1 time frame, so while they look really big, they're in pips. They're not huge. Yet these 4 pins at the top, much different shape and size in the candles. So there's a definite change there, right? The price is stalled. It does look like it's pushed up a little bit, but again, I'm on the M1, so it's not pushing up much. And then I get that red candle, and that's where I say, okay, enough. I look at the trends again. I check them, and then I look at the RSI. The RSI is pinching, and on the longer, on the higher trends, which are the H1 to H4, they're pushing down. And I know this before I get into the trade, so as soon as I get that red candle, I'm thinking, okay, I want out. I'm in the money. There's no reason for me to stay with it any further, because this trade really is a counter trend trade. So I choose to protect my profit, which is one of my rules. I don't think enough traders do this. Because you constantly hear, let your winners run, let it run, let it run. Well, if you don't manage the trade, so often those runs turn into losses because you don't manage them. And I know so many horror stories like that. And once I'm in profit, I'm very clear on that. I will not let it come back against me. Now, does it ever happen? Sure, it happens sometimes. I don't catch it quite right. But the point there is that once you're in profit, there's no justifiable reason to let it push back against you and take you into a negative position, into a losing position. Because if it's going to push that hard against you, you're better to take the profit where you're at, let it push back, If your setup is still in play, in other words, if it's still valid, then go ahead and get back in, and most likely your entry is going to be a better entry than you had to begin with because you had that nice pullback. So you have profit, you have a pullback, and now you're back into the trade. And if it doesn't play out like that, then you at least have profit. So I'm not always going for the big plays. And this trade right here is a really nice little pattern. Again, this is the M1, but the thing about patterns is they're fractal in nature, so they occur in all time frames. So what I'm saying to you is that this is a pattern that works for me. If it was a pattern that works for you, so I'm sure you have patterns that you've done really well with. Well, why not look in different time frames to see if you can find that pattern reoccurring again and again. And if you can, then build a set of rules around that, and start make it part, another tool in your trading tool belt, right? Another way for you to make money. So this is not a big trade, but it is profitable. And as you know, or may not know, if you can make $1, as your account scales up, that dollar can double, triple, and tenfold, right? So by the time you're trading lots, a move like this could easily produce a very nice profit. So you got to think about those things, and use them to your advantage, because the goal here as a trader is to be profitable. And so when you do find ways to be profitable, pay attention to them, and see if they're repeatable. See if you can use them again and again and again. Okay, my mistakes. I was pretty clear on this trade. I stayed true to myself on it. So the only real mistake was the initial entry, which I mistakenly took the wrong direction. I take short entries far more than I do long entries, and it's just a habit. And so sometimes I get bit by the habit, which is a great point. Habits, if you can build profitable habits, your habits will keep you in the game, even when your thoughts tend to fail you sometimes. It's like when you're driving somewhere and you have this habit of going one direction, and without even thinking about it, you end up in a place that you weren't intending to go because your habits, right? Your habits. You ended up, your subconscious, it's such a habit, that routine, that once you started going in a certain direction, everything else played out, and suddenly you realize, oh, you're going to some place, like to work, school, wherever, and pick up the children, and that's not where you were intending to go. That's the beauty of habits. So learn to use them, and learn when you find something that works, do it again and again and again and again. Make it a habit. Do it so much that it becomes a habit without thought. You just do it. Okay. So what did I accomplish? Well, I closed my initial trade immediately. I traded my setup. As such, I had a reason to be in the trade. And this is a big thing about setups and rules and plans and all those sort of things. Goals. I don't know, goals. actually, but your setup, your rules, and your plan. When you trade outside of those things, you're, like in the previous video, you're flying blind, right? You're guessing at it, unless you've done some work and you're experimenting. Most of the time, though, when you just take a trade to take a trade, there's generally not a reason to be in the trade, and because there's not a reason to be in the trade, it's hard to stay with the trade. Even if it's moving in your favor, it's really hard to justify it because you don't have any real reason for being in the trade to begin with. Sure, you can see it moving in your favor. However, how far do you expect it to go? You know, how are you going to manage it? How do you want to exit it? Are you going to scale out, or are you going to play it, trade it all, let it run to a point and then trade it and get out? Where's your stop loss? Are you going to move a stop loss up with it? Is it mental? I mean, do you have an idea of where you want to do things? And that's generally what happens when you just jump into a trade and you don't have a reason for being in the trade. There's no clarity, so it's hard to focus on the thing to do because you don't know what the thing to do is. Again, I traded my setup. I monitored my indicators. Well, what do I mean by that? Well, I monitored my trends, my short-term trends and my long-term trends. I monitored the RSI. I like the RSI. I use a custom RSI, so it gives me the feedback that I want. And it's really important for you as a trader to find what works for you. Other than those two things, my trend lines and the RSI, I like a naked chart. I don't like a lot of stuff on my chart. I don't like to cloud my thoughts. And the more you put on a chart, the more difficult it is to see, to understand what's happening. What else? I managed the trade, right? I watched it from beginning to end. I managed it. I checked the things I needed to check as it was moving. Made the decisions that were important for me as a trader and honoring my setup and my plan. I exited the trade quickly once I got the red bar because I knew I was in a counter trend. Okay, this is the M1 time frame, so I was trading 1-minute candles. So my expectations were changed because of that, right? So I brought them back. But also, I'm taking a counter trend. Because I'm taking a counter trend, I don't have an expectation that this thing is just going to keep going and going and going and going up and up and up and up, because the higher trend is pushing down. So I get that red candle, and for me, with all the things that I looked at, the RSI is pinching. I look at the M5, the M15 as well. They've changed in their direction, and I have the overall trend that's pushing down, the H1 and H4. So it's time to get out, and there's no need to even think about it. I just get out, right? So I exited the trade quickly. I protected my profit because I had a profit. Losing money at this point, there's no reason to. There was nothing to think about. It was just time to get out. Okay, so in summary, this is the kind of trade that will consistently win. It's not a big trade, right? But like I said, patterns are they're fractal, so they repeat in different time frames. So if I wasn't satisfied with the pips on this, the question is, can I find this pattern on a higher time frame? And can I find it consistent enough to trade it? So just keep in mind, this is something that you can do. The pips were not huge, which I just talked about, still over time. And as a trader, you're not here for this quick, overnight, get rich quick kind of thing. If you are, I don't know why you're watching this, because that's not what I'm in this for. I'm working to be a full-time trader, and this is how I want to sell off into the sunset as a trader, because I absolutely love trading. It was trading that actually got me into computers to begin with. So really, there isn't anything I would change. I had the mistake at the beginning. Mistakes happen. There's no such thing as trading perfectly. And if you think there is, that's going to cost you more money in the long run than you could ever imagine. So let go of that. Learn to trade with the imperfection, because we are all imperfect traders. No matter how good you are, imperfection is just a fact of life. So ultimately, I followed my plan, and the trade was profitable. See, that's not a guarantee. Just because you follow your plan, your setup, and the probabilities are in your favor, it doesn't guarantee profit. The profit is a big plus, right? That's why you're here. That's why I'm here. Profit. Without profit, there's no point in doing this. I can just go get a job. There's easier ways to make money. So if you're not focused on profit, then work on your mindset, because you're not in the right place. Okay, so here's the entry candle, the exit candle. Those are the entry points. There's my buy, there's my sell, and that's a trade. What's the purpose of a review? And I'm going to talk about this every time afterwards. Holding myself accountable. For yourself, reviews are important, right? If you don't take time to review your trades, and I'm not telling you just to don't focus on just your bad trades. Spend more time focusing on the trades that work. If you get caught up in your bad trades and you focus on them over and over and over again, all you're going to be thinking about when you're trading is what not to do. And that's not why you do reviews. You do reviews to figure out what to do. When you make mistakes, sure, you want to change them, but don't let your mistakes be your driving force. Okay, so I want to share my trading experience early and often while the lessons are fresh. Why? Because I've been profitable, and this is my second go at it, and this time I'm really going after becoming a full-time trader, FOREX trader. So I want to share with you my angst, my challenges, my successes, and every little thing as it's happening, because most traders, we don't get to meet them or learn from them and those kind of things generally until it's 5-7 years down the road. And there's no way they remember everything they were going through at the beginning. And odds are, at their mature point, they probably don't even see all the beginning struggle as important. I don't think like that. I think what happens in the beginning is absolutely essential to understand. So that's why this is happening. So I want to show you that you or I do not have to be perfect. You don't. You just don't. So let go of it. There's profit in the imperfection if you just accept it. Reveal what isn't obvious at a glance. Well, and that's it. Doing the work, right? Doing the chart work. Doing the markets like what I just did. Going through your charts, your trades, and marking things up. So often you're going to end up seeing things after the fact that you just didn't see in real time. And so the more you see them, even in hindsight, the more likely you are to see it in real time. Habits, right? The habits of profit. Habits of profit. Reinforce what to do. I've said this several times. This is about what to do. Clarify my thoughts. If you don't have clarity, trading is going to be extremely challenging. Building habits based on probability, right? Habits of probability. I told you that. I've already said that. That's the habits you want to build. That's why you want to focus on what works for you. Reduce discretionary trades. And for me, now, I can't speak for you as a trader and whatnot. I know for me, I just want to reduce the number of discretionary trades I take. In other words, trades I take by choice without a whole lot of, well, they just don't necessarily match my setups, or I'm making decisions with my setups where I'm not trading them, even though I have a setup. And so I want to have good balance there. I don't want to be frivolous. In other words, I don't want to be taking a lot of discretionary trades where it's hard for me to really nail down the probability and the effectiveness of those trades. So what's next? Well, you can follow me on Twitter, and that's twitter.com/myForex Yoda. You can follow me on Facebook. Well, I say follow me. You can join one of my Forex trading groups on Facebook, and it's facebook.com/James Possible. You can subscribe to my FOREX Yoda. That is free, and that project is at its beginning. So I'm working on getting everything in place for it, but the intention is to, on a daily basis, to feed your mindset and habits as a profitable Forex trader. Even if you don't trade Forex, I promise you there's still value for you there. And that's pretty much it. So thank you for being here. I look forward to sharing the next review, and have a great day. Have great success with your trading. If you have questions and thoughts, just shoot me a tweet, shoot me a comment in Facebook. There's so many ways. Just YouTube, you can share the question with me there as well. I'll do my best to answer them. Again, thank you.